Hello, my dear audience, I'm Eva. Today, I would like to bring technical analysis which I think is most valuable for you. Today, my episode title is Decoding Marketing Ryhthm. Do you think this content is useful for you? Imagine if you can predict when market go up from a downtrend or go down from uptrend. It's absolutely happy to trading. Today, I would like to share the way of mastering trade time. If you wanna master this well, you have to understand the market cycle firstly. The scientist Jan Hurst found the disorderly rise and fall of the stock prices are mostly affected by the cycle with different cycle lengths, coupled with the noise in the underlying trend in the market, which makes it difficult for traders to capture the rythm.
No! God, please, no!
Make it simple, the movement of stock is regular. Due to many reasons, because the regular movement cannot be found easily. But don't worry, the scientists have already found the stock movement rhythm, which helps the traders to find trading time.
No!
If you want to understand this magic, I have to invite Mr. Lars von Thienen, who will join the Bogu International Investment Forum to explain to you. He's really handsome.
I will show you now how a basic stock chart and cycle composite will look like. This is what looks similar to like stock market price data. And here the vertical line is, let's say this is today. This is the point in time where we do our analysis. And the dotted line here is then the future of the price, which we don't know yet, but it's just a theoretical price, right? So this is how price charts look like. And would you assume that this is purely based on cycles, what you see here? So, and that's what I want to explain you if we have a look at the bottom of this chart here. So what you see here down below are different cycles. Let's start with the first long-term cycle we see here. This is a very long-term cycle, a simple cycle. Then we add a second shorter-term cycle, which is looking like that. We add a third cycle, which is even shorter, and we add a fourth cycle, which also is shorter. So we are just using now 4 different cycles here, plus a lot of noise. If we add all these cycles all together, so we start with the straight line. Now we start to build a composite based on the 4 cycles you see down below. So now we add on top the first cycle, so the blue one, plus the green cycle here, which results in this composite behavior. Then we add the third cycle here, which is the amber one here, which I'm showing you with the mouse. And if we add these 3 cycles, you can see it starts to look quite different. And if I now even add the fourth cycle, which is the red one here down below, a very small cycle, you see that the composite, so the total of all 4 cycles now looks very different. And this is now what gets more close now to what we see only as composite on the stock market. That's not all. So these are just 4 cycles. In addition to that, for sure, we need to add a kind of trend. So there are also trend components, and the trend is a straight upwards moving or downwards moving line. In this case here, I will just add an uptrend line, which you see that now it moves a little bit to the upside. And finally, there's not only cycles, there's also noise in the markets. So last but not least, we will add some noise, and noise is just random ups and downs, so not periodic cyclic behavior, which we have used so far. So if I activate the noise, you see if I turn it on and off, or we can even zoom in here. So now then if I disable the noise, you can see the clear cyclic behavior here, but any stock market is not as clean as this. So therefore, if I just enable the noise, you can see now that now it's not as clean as before. And if we zoom out now here, this looks quite more like a like a classical stock price chart, what you see here. I mean, this is just the theoretical data, but I just want to tell you that we only have a look at these price data sets here, but even though it does not look that this is purely based on 4 cycles, it is a pure composite based on 4 cycles and some trend information here. And I think that's now the interesting point here of the story, that we can even plot this cycle into the future. So you see now the trend and the cyclic behavior. And if you zoom in, and if you don't know about these cycles, this would look like any classical stock chart here.
Yes, I hope today's episode can bring a whole picture to you for understanding market rhythm. If we can know when the trend will be changed into upside direction, then we will know when we should sell or buy stock. But of course, Mr. Lars von Thienen's view on cycle series is that no matter what kind of market or financial instrument is traded, cycle prediction method has gaining significance for the predicting the approximate high or low point of the trading. But traders should not only rely on the cycle prediction method for the market trading, but also use other indicators to assist the trading. We can use information obtained from the cycle analysis to predict the rise or fall timing in next 2 to 3 years for risk management. That's all content of today. If you want to learn more from me, subscribe my channel. See ya!